Hello all, welcome to Your Schemes. I am Ilakya. I hope you are all doing well. Today we are going to see India's best performing mutual funds. We will see 5 best funds from each of the following category. The first one is equity fund, 5 best funds from debt fund category, 5 best funds from hybrid category. Before we proceed, let's first understand what is equity, hybrid and debt funds and what's the difference between them. Equity funds invest about 65% of their assets in stocks and its derivatives, whereas debt funds invest in debt securities and money market instruments. Hybrid funds invest in both equity and debt instruments. Now let's see the difference in the risk. Equity funds are of high risk. Debt funds, the risk is very low. In hybrid funds, the risk is moderate. For equity funds, the returns depend on the market. For debt funds, the return is relatively low but stable based on the interest rate movement. The returns for the hybrid funds are partially stable and depend on market performance. The expense ratio of equity funds are generally high and the expense ratio of debt funds are relatively low. Hybrid funds, the expense ratio is similar to equity funds with minor differences. Equity funds are best suited for long-term investment horizon for 5 years and above. Debt funds are suitable for short to medium term, whereas hybrid funds are suited for medium term. Let's now look at the average annual returns. For equity funds, the average annual returns range from 12% to 15%, and for debt funds, the average annual returns is 9 to 10%. And for hybrid funds, the average annual return ranges between 10 to 12%. For those who want high returns and have high risk tolerance, then they can select equity funds. For investors who want higher returns compared to bank account and deposits, can prefer this debt fund. The risk is also low. Investors who want higher returns at moderate risk, they can select hybrid funds. Without further ado, let's now look at the best performing mutual funds. This video is for information purpose only. Mutual funds are subject to market risk. The return shown in this list doesn't guarantee future returns. Please consult your financial advisor before investing. Let's start with best equity funds. First on the list is HDFC Mid Cap Opportunities Fund. The 3-year return of this fund is 36.45% and the 5-year return is 18.04%. The expense ratio of this fund is 0.88%. Next we have ICICI Prudential Blue Chip Fund. This gave a 3-year return of 24.32%, whereas the 5-year return is 14.79%. The expense ratio of this fund is 1.03%. Next we have SBI Blue Chip Fund. The 3-year return of this fund is 24.46% and the 5-year return is 14.45%. The expense ratio of this fund is 0.87%. Next on the list is Parag Parikh FlexiCap Fund. This gave a return of 26.08% in 3 years and the 5-year return would be 18.94%. The expense ratio of this fund is 0.69%. Next we have HDFC FlexiCap Fund. This gave 32.26% in 3 years and 17.42% in 5 years. The expense ratio of this fund is 0.96%. Please note that all funds are direct plans. From the list, we see that equity mutual funds have given very handsome returns over the past years. A return of between 14 to 19% generated by these funds is considered above average by the market standards, and it also helps investors beat inflation very comfortably. Now let's check best debt funds. Let's start with ICICI Prudential Corporate Bond Fund. The 3-year return of this fund is 5.57% and the 5-year return is 7.64%. The expense ratio of this fund is 0.32%. Next we have ICICI Prudential Short Term Fund. This gave a 3-year return of 6.09% and 5-year return is 8.06%. The expense ratio of this fund is 0.40%. Next on the list is Aditya Birla Sun Life Corporate Bond Fund. The 3-year return of this fund is 5.38% and the 5-year return is 7.72%. The expense ratio of this fund is 0.31%. Let's move on to Bandhan Banking and PSU Debt Fund. The 3-year return of this fund is 4.94% and the 5-year return is 7.82%. The expense ratio of this fund is 0.32%. Next we have Axis Banking and PSU Debt Funds. This gave a 3-year return of 4.86% and the 5-year return of this fund is 7.35%. The expense ratio of this fund is 0.34%. Please note that all funds are direct plans. Like I mentioned before, debt funds are one of the most stable categories of mutual funds. And from the list we see that this has generated between 7 to 8% as steady returns over the past 5 years, making them an excellent option for risk-averse investors who are looking for a better returns than fixed deposit. Now let's see best hybrid funds. First on the list is HDFC Balanced Advantage Fund. The 3-year return of this fund is 27.23% and the 5-year return is 15.89%. The expense ratio of this fund is 0.85%. Next we have ICICI Prudential Balanced Advantage Fund. This gave a return of 15.67% in 3 years and 11.65% in 5 years. The expense ratio of this fund is 0.91%. Let's move on to ICICI Prudential Equity and Debt Fund. This gave a return of 28.66% in 3 years and the 5-year return of this fund would be 17.38%. The expense ratio of this fund is 1.13%. Next on the list is HDFC Hybrid Equity Fund. This gave a return of 23.24% in 3 years and 14.14% in 5 years. The expense ratio of this fund is 1.08%. Next we have Kotak Balance Advantage Fund. The 3-year return of this fund is 13.91%. The expense ratio of this fund is 0.49%. As I've already mentioned, hybrid mutual funds invest across both equity and debt categories and combine the best of both the asset classes. These are best suited for risk-averse investors. From the list, we see that the returns offered by hybrid funds are almost equal to equity funds and the risk is also comparatively lower. If you feel this information was helpful, then please leave a like. For more similar videos, please subscribe to Your Schemes and do not forget to share it with your friends. Thank you. Have a good day. Bye-bye.